So you can't pay your mortgage, you're late, you don't know what to do. Loan modifications are back. You might be able to modify your loan, lower your payments, and get your house out of default. So I'm old enough to remember 2008, 2009, 2010, when the last recession hit and people were losing their homes and they didn't know what to do. A lot of people turned to a program called the loan modification with their bank. Now things are a little bit different nowadays. The government is not involved like they were in that time. However, banks are still modifying loans and you still might be able to apply for loan modification and retain your home. Just a quick background. If you have stopped paying your mortgage, either you're in a forbearance or you just cannot pay and the bank doesn't offer any assistance, you might want to apply for loan modification. In essence, what you're asking the bank to do is to take your loan, change around a few things like the interest rate, extend the term, sometimes put a portion of what's owed on the back as a balloon, manipulate the loan in a way to lower the payment, the principal and interest payment, to something you can afford. Generally between 31 and 40% of your income, which I'm going to show you exactly how that looks in a minute. In terms of the question of should I do it? Well, if you can't pay your house and you can't catch up on the last few months you haven't paid, or however amount of time you haven't paid, or if you're facing foreclosure, if you've been served by foreclosure, a loan modification probably is the way to go. There are other options through bankruptcy and some other things. However, a direct loan modification might be the way that you save your home. Now, the next question I get is, how do you do it? Most banks, after the Great Recession, set up loan modification departments, which means that they've already have a program or some sort of process in place generally to apply and change your loan terms to something that you can afford. Now, it's not always successful. You can't assume that they're going to be able to do something for you. If you owe too much on the house and it becomes impossible to manipulate the loan to what your income is, then obviously the bank's not going to give you the house for free. However, many times the bank can manipulate the loan in a way to keep your house. Now, in regarding how you do it, I'm going to show you an example of someone who got a loan modification through my office, so you can take a look at how that works, and then you can decide if it's something that you want to try on your own. In essence, this person was paying around $2,200 to $2,300 a month. The income that they had at the time when they applied was $60,000 a year. $60,000 household income between him and his spouse. That amount of money basically is a very limited amount of money, but it's still possible to manipulate the loan. These individuals were able to get a loan modification where their interest and principal and interest payment plus escrow was a little over $1,500. I'm going to show you the documents in a second. So how do they get that? It's a pretty simple math problem that you can do on your own. You can determine if your income works for this type of thing. In essence, you take your income, your monthly gross income. So in this case, this gentleman was making about $5,000 a month. 5,000 times 12 is 60. So you see where you go. So you take your income, you divide it by 12, your yearly income, and that's how you determine your monthly. From that, you multiply that by 0.31, which is 31%. When you multiply it by 0.31, you get approximately $1,550 a month. So that's his budget. So that's what was presented to the bank. The bank then manipulated the loan in a way that now he's paying $1,550 a month, including the escrow, which is really important. The escrow are the taxes and the insurance that you're probably paying. So as long as he makes his 3 payments through the trial period, which is what was offered, eventually 3 or 4 months down the road, he's going to get offered a permanent loan modification, approximately this amount. It's generally this. It could be a little bit more or a little bit less depending on the taxes and the insurance. But this is the number. So this gentleman was a couple years in, basically a couple years without paying his mortgage. So this gentleman didn't pay his mortgage for a couple years, had a large debt to the bank of money that was owed, but he was still able to modify and get his payment down to $1,550 a month. That's something that is possible. That's something that you can do on your own. There are lawyers and there are companies that do offer this. You judge them and you judge their what they're offering you with what, by whatever terms you want to. I'm not going to tell you yes or no to hire or not hire. However, some people probably should hire somebody to help them, specifically self-employed people. Because the problem with a loan modification is that you have to prove income. And income is hard to prove for self-employed. In this case, this gentleman had W-2, which meant that he was just a regular employee. He just had to show his income. And that was sufficient through his W-2, his paychecks, and his bank statements, and his taxes. And that was enough to prove his income, and he's able to get his loan modification that way. If you're self-employed, it's a lot more complicated. You need profit and loss, and there's other proofs and things that you need to show in order to get the loan modification. If you do it properly, you might be able to get a loan modification and save your house. Now, the other question I get is, what about credit? Well, this gentleman's credit was 535, so credit doesn't matter. The banks don't look at your credit. They know that your credit's bad. They're operating on the value of the property and the idea that if you don't pay, they'll still be able to get their house back and their collateral back. So it's a low risk proposition for the bank. That's why they offer it to you. Now, I'm going to do other programs with more specific information on loan modifications, but if you are having trouble, definitely call your bank, tell them you're having trouble, explain to them that you're having a hardship for whatever reason. It could be coronavirus, COVID, could be something else, and ask for the application. The application is generally pretty straightforward. Apply and see what you get. If they deny you, then at that point you might want to go talk to a lawyer or somebody who might be able to help you. That's my advice for now. My name is Diego Mendez. I'm a bankruptcy and debt lawyer. I've done thousands of loan modifications and bankruptcies for many clients, multiple thousands, and something that I do for a living. Don't forget to subscribe. Don't forget to like this video. Ask any questions you might have in the comments below. I'll try to answer your questions. I'm not going to give you legal advice unless you're in Florida, but I can still try to guide you a little bit. I've done thousands and thousands of these cases. I've helped multiple thousands of people through their loan modification, foreclosures, and bankruptcy cases, so I know what I'm doing. Diego Mendez, debt lawyer, Miami, Florida.